Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures instruments using the Viper tools, you are absolutely in the right place. First, we got to knock out our standard disclaimer before we can get on to looking at charts and trade setups. So let's get that out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Without further ado, let's get over to screen one, where there is a nice Russell chart awaiting us. Tonight's title is When to Scalp and When Not to Scalp, Part 1. We will have a Part 2 of this session on Saturday morning at 9 a.m. Pacific. Everybody will be invited, so look for that link. Now, let's start off with something pretty simple. When we say scalp trading, what does that mean? Let's start off with the definition of scalp trading. Here, let's just put it right here on the chart. Somebody says to you, you know, I was doing a lot of scalp trading this morning. What in the heck are they talking about? Scalp trading. What is that? What is that? What does that mean? Equals what? What in the heck is scalp trading? Is that like, you know, somebody gonna come and like scalp you? Take all your hair away? What is it? If I was to, I gotta type in an answer here. I'm not, like I said, I'm not being facetious. This isn't, not just asking this for my health. I'm really asking, how many of you know what scalp trading even is? Because we can't start to talk about doing it until we know what it is we're doing. I see some responses coming in. Greg S. says, just a few ticks. Paul G. says, taking multiple small gains. Dennis adds in, taking quick profits at 7 to 10 ticks for profit. Crumps? Hey, Kathy. Not sure what Crumps is. Quick in and out from Gary T. Having a limit target from PW. Good. In and out with fast profits from Bill. And just taking a few ticks of profit from Dave H. Perfect. So let's go ahead and put that in there. So we're all on the same page. So the definition of scalp trading is all of kind of what everybody put in there, kind of jumbled together. So it is how would you put it? Quick to take profits. On short bursts of volatility in the trade direction, which I think most of you got. Well, those are not necessarily crumb trades, Kathy. I know for a fact there are quite a few very successful traders over the years who make very, very good money just scalping. Now, scalping can occur in two forms. In fact, let me put that right on here because we're going to discuss the two forms that it can take. And they are two forms of scalp trading. The first one is, and this is the kind that we do mostly almost on every trade, is that you need to put on two lot. So you have two contracts on your trades, and you take one off. Take one contract off at a limit order, which usually is going to be somewhere between 6 to 10 ticks, depending on your instrument. order around 6 to 10 ticks. Some of the high flyers, if you have a very volatile instrument like say crude oil, or NASDAQ, or one where you get these huge monster moves, your initial target's going to be a little larger. It's going to be 8, 10, 12 ticks, because you can usually pull those off on a pop. Now you take an ES, which is a slow grinder, and a big move on ES is like 12 to 14, 20 ticks. That's a big move on ES for the entire move. Hey, Eddie, welcome. If you're just coming in, don't worry. This is a lot of late birds, no problem. We're just kind of kicking off here. You haven't really missed much, and this is recorded. We'll get it up on the web tomorrow. Yeah, so you take one off. So you put the 2 lot on. You take one off quickly, and then let me just put the sort of the tail end of this. Let me do it this way. Then in this particular style of trading, the runner, the stops for the runner. So you have the initial stops, and we'll show this. I'm just sort of verbally typing an input on the chart. We'll actually show examples of this, but I'm just at a very high level explaining what happens. For the second contract, quickly move to within 2 to 5 ticks of the entry. We'll explain that in more detail. Okay, so in this sense, what you're doing is you're putting 2 contracts on your trade, right? You peel one off very quickly at your scalp. You have 2 initial stops sitting at maybe 10, 12 ticks back, protective initial stops. Once you peel the scalpy off, you hear that in the room all the time. Okay, you got a 10-tick pop. Peel your scalp trade off. Move up your remaining contract or contracts, if you have multiples, say 3 or 4 or more, on to 2 ticks, 3 ticks, whatever, behind your break even. That way you have, or you can do the converse of that. Let's say you had 3, you can peel off 2 at your scalp and leave 1 with the trail for the runner. So in this sense, you're trying to capture both. You're trying to get a short-term burst of volatility, and you're trying to get a runner. Short-term burst of volatility, you try to get a runner. If that stops out, you get back in, you get the idea, and a trend move. Now, the second way to do it, and there's, like I said, a lot of people who do this, is that you simply just, or let me put it this way, mostly just scalp trade. In other words, once you get your pop of 8, 10 ticks, you don't care if it runs 100 ticks more. You got your 10 ticks. You're done. You just scalp trade. That's it. That's all you take. Now that we know what that is and how it works, let me get done. Let me just try to fix this part while I'm here. There we go. Okay. Everybody clear about what scalp trading is and how we do it, just at a very high level at this point, just sort of understanding what it is and how we do it. Now, when we talk about where we would scalp trade, just intuitively think about this for a second. Would you tend to have more scalp trading when you are in a range? Say like that, when you're in a range. I don't know, say something like this. Or when you're in a trend. This would be a trend move here, like this downtrend right here. Would you tend to do more scalp trading in ranges? You type in an R for ranges. Yes, you would do more in ranges. Or would you tend to do more scalp trading in trend moves? So you would type in a T. It's one or the other. Of course, given this first comment here, I'm taking that off the table in the fact that this is just a standard way we trade with the 2 lot. You take the scalpy, move the thing to 2 ticks behind the break even. So I'm excluding this. I'm talking on mostly scalp trading. Would that tend to be in ranges, you think, or more in trend moves? Well, I'm taking both off the table, Kenneth. Yeah, because we've already discussed that this is our normal. I'm kind of stepping away from this, talking more about just the scalp trading itself. Yeah, ranges. Ranges, exactly. Ranges tend to be more scalp trading type deals. So how do you know? Now, some of you might be saying, "Well, I hear that, Charles, and you armchair quarterback at 5 o'clock on a Thursday, writing all these manner of words in here, telling us what to do, and barking out your orders at us. How in real time are we going to know whether we should be scalping or taking those trend trades, right? In real time, how are you going to know? We see after the fact, yeah, sure, of course, yeah, this is a range. Sure, I should have been scalping in here. I should, buy in the bottom, taking coin at the top, flipping, shorting up here, et cetera, et cetera. So essentially, I'm scalping inside of a range, and then we go trend bound. We're trending, and I should be taking retracements into the mid band, getting short, and then taking those trades. Yeah, that's all fine and good. Now, how do I do it in real time? Do you want to see how we do it in real time? You want to see how we do it in real time? Let's do some together. Let's do a couple together, and then we'll do an exercise where we'll I'll ask you some questions, and you will make the calls. Okay? Let's do a couple easy ones together. Okay? Yeah, it depends on the time of day. Absolutely, it does. Sure, it's Robert. Good call. New highs and lows can establish the trend. That's correct, Greg. Absolutely, that's how you tell the trend. New highs and lows. Okay, here's how we're going to do it. Now, markets open at 6:30 Pacific my time. So I'm going to pull up a Russell chart, and we're going to go right around 6:30. And and we're going to look at the condition going into, today was the 7th. This is yesterday morning. We're going to look at some various conditions and how quickly you can decide how to trade various market conditions. Okay, here's Russell. Now, when we get ready to trade in the morning, what is the first thing we do? Now, for you folks that are new, I'm going to show this, and then I'll backpedal a little bit because we have a whole slew of new people come in, and you might not even really know what you're looking at, so I'll back up and explain it real quick for you. You would draw support and resistance lines every single day. If there's one thing you take away from tonight, the most important disciplinary thing when you fire up your charts in the morning and you pick your chosen instrument that you're going to trade for that day is you've got to draw support and resistance lines. Is absolutely critical, because all your decision making is going to come from that. Now, if I was to blow this up from overnight yesterday morning on the Russell, I'll just do a couple together so we can see them, and then you're going to do them yourself. If I was to put support and resistance lines, you put one kind of down here, and you can put another one more or less up in this area right here. So there you have it. Now you don't have to be absolutely, spot on perfect and take, 27 hours to microanalyze the chart. You just kind of look where some swings are. Here's a swing right here, right? This is overnight. Here's another swing here. It's a little bit above it, but it's close to it. Swing is where a market comes down and it bounces, or says it gets rejected on a resistance roll right up here. Here it comes a little bit lower. Then you just kind of split the difference. Whatever. You look for 2-3 points that kind of are close, and you just simply put a line there. That's called support. Okay? Now, then you start to look for some resistance levels, and you can start to see where they pan out. There's, kind of a swing here. There's kind of a swing here. There's another one here, and then there's one forming over here. Okay, so you just that's it. Pop a line. Doesn't have to be any more than that. Now, and that's 64.30 to 69.30. So you're at about 40-50 tick range. Good, beefy starting range. 6:30 would have been, I don't know, over here somewhere like that.
So, maybe your initial thing was a little bit lower down in here. Doesn't matter. That's not the point. The point is this. Is the takeaway from this, and this is the reason you do this, is that as long as you remain between these two lines, you are said to be what? If you're in between those two lines, you are said to be what? Those two lines right there. Range bound. So that's how you do it in real time. That's how you do it. It's not some mysterious wizardry where you gaze into crystal balls and throw some potions and all try to figure out what's going on. You just put two lines on the chart. I mean, it's literally that easy. And if you stay in between those lines, you're in a range. That's it. Done. Yeah, you're sideways. You're range bound. Now this is a large range, 40 to 50 ticks, so we say it's tradable. And we'll talk about how to trade it in a minute, but I just want everybody to be able to establish the range first thing in the morning. This is critical to your success. Now, a word about ranges, and you're going to see this as I advance the chart. Some instruments are better than others at respecting support and resistance. Let's go ahead and play out yesterday morning, and then we'll talk about how you could have traded it. Okay? All right, let me advance the chart so we're all looking at it together. Here we go. All right, here's 6:32. Market's literally 2 minutes into the market open. You pop up, you get another swing up there, and as that happens, there's 640, 642. You can adjust your line a little bit. You can put your line a little bit higher, maybe sort of right up in there, sort of between this peak and this swing right here. Okay, so now here's the range right here. Now you're coming up on 647. You're rejected. You come down to support. You break it just a little bit. You break it just a little bit. I would leave that line where it is, even though this went a little bit below it. This is what I'm talking about, the respecting support and resistance levels. Some are better than others. We'll look at a couple instruments. Some will just spike way up past it. So if you're looking to short the top, that makes it tough. If you got a spiky instrument and you're trying to trade a range and it's blasting through support and resistance, you're like, what the heck? I can't trade this, right? So question, it's 7:07. Over here at 6:30, we put these two lines on the chart right here. At 7:07, are we still in the range, yes or no, in your estimation? 7 o'clock, so about a half an hour, a little more than a half an hour. Are we still in the range, yes or no? Yeah, of course. All right, here we go. Let's keep going. Okay, here's 7:30 coming up. Rejected at the top again, right up at this resistance level, right around 68, 650, 68.9. This was a little above it. This was a little below it. This hit it right on the button. Still in the range. 8 o'clock. You're at 8 o'clock. Hour and a half into the trading session. Are you still in the range? Are you still in the range? Yes or no? Yeah, sure you are. All right. Now I'm going to advance this chart. I'm going to keep advancing it, and the answer is yes. Of course, we're still in the range. We're still in the range. We're still in the range. I'm going to keep going the rest of the morning, and when you think it's broken out of its range, you quickly type in a B for breaking out. We're simulating as if we're watching this market live yesterday, and we had these lines on the chart, and we're trying to figure out if this thing is going to break and which way it's going to go. So remember, I'm going to advance it, and you type in a B when it's broken out of its range. Here we go. Okay. 806. 824. 830. 840. 854 coming up on 9 o'clock. 9:10 a.m. Pacific. 9:30. Now we're 3 hours into the session, right? 3 hours into the session. We started this exercise way over here at 6:30. Remember the two is where we put our 2 lines. Okay, here we go. 9:37, 10 o'clock, 10:24. All right, time's up. Now, I want to speak to this because this is really important skill set to learn in your trading, okay? This is a skill you're going to use all the time, especially in dealing with ranges. There are times when the market will come up and spike up a little bit through, and some of you typed in a B right here. There was a handful of you typed in a B right here. Now, retrospectively, looking back on because we were pretending we were going in real time. That's how you do it in real time, right? You're reconstructing real time as if now you're watching it again. What would I have done? What should I do? Why, looking back on it, is this not a bona fide breakout? And by the way, everybody who typed in a B over here, yes, you got that right. What is the difference between this price action and this price action? What is the difference? Let me be more broad in my drawing of this. Yeah, let me do it more like this. How is this oval different than that oval? And why is this a breakout and that one isn't? Well, just look at the two. What's the difference? Right, it's where it pulls back to and bounces. This is the ABC move over here. A, B, C follow through, yes? A, B, C follow through. Here was the A thrust on this one. Where was the B and C? Didn't happen. This is a really, really, really super duper important price pattern to memorize. See how you come deep back into the middle of the range here? See it? Now, yeah, of course, you can look back and you say, well, you were establishing some higher lows here in this sort of upper range. That's true. You could have drawn a line right there. And this is a breadcrumb clue that this break might happen here. But what I'm saying is you'd obviously see the difference was this one went deep back into the middle of the range, whereas this one actually held the support resistance level. The resistance levels became support on a pullback, and blammo, now you're heading up and you are trending up and buying pullbacks. Now, Jeff asking if this is a phantom trade. Let me explain. I hear confusion about phantom trades all the time, and let me clarify for everybody what a phantom trade is and when it's applicable and when it isn't. So this is something you can just sort of remember, okay? In ranges, there is no phantom trade. It's not applicable. Let me just put it this way. NA, not applicable. It's not applicable. The only time you can have a phantom trade, by the true definition of it, is that you have come out of a trend move, and I'll show a couple of these tonight, okay? You have a trend move. Let's say the trend is up. It's going up, 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 and all of a sudden you get a very dramatic pullback, and the pullback comes all the way out. It's going up, 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 and it comes all the way back to the outermost band in the other direction. And maybe the bars turn another color, like red. So it almost looks like a trend change, and then it bounces. That is trend continuation on what we used to call a deep probe. So let's put it this way. It's a deep, we used to call it a probe trade / retracement in the opposite direction of the trend. So by definition, can a range have a phantom trade? Look at the definition of it. A deep retracement in the opposite direction of the trend. What is the definition of a range? A range is the lack of a trend, right? A range means you have no trend, the absence of trend. So you can't have a phantom. Everybody understand that? Yeah, I didn't ask for the trade. In this case, the trade would be up. We'd be getting long. I simply asked for a B when you thought it broke, a legitimate break and coming out of a range into a trend. And the correct answer was right over here. When this pullback held the support at this line right here, this was, you could have actually boxed this and favored the long side. This was a trade entry right here, long. This was it. You were getting a series of higher lows and higher highs. It established a higher low level. It already tried to break out with a head fake. So what I'm saying, to be clear here, is we don't take breakout trades per se. So in other words, you never want to put a buy limit order in right here and want to get long breaking out of range. You never want to do that. You just don't want to do that. I'm telling you, you don't want to do that. Because you're going to get head faked all the time and you're going to get stopped out. Here you would have got head faked in and stopped out, limit order. A lot of people do that. Oh, here's what I'll do. And I used to do this 10 years ago. I'll put a buy order here and I'll put a sell order here. And when this breaks out, bam-o, I'm going to catch the run. No. It has to break. It has to pull back, hold the higher level of support in case of the long, and hold this long only, not short, because it could quite possibly go a little deeper, and now you're sucked into a short, and you take the long trade, and it pans out quite nicely. Those are false breakouts. Yeah, that's what those are. Anytime you come up to you can have false breakdown. That's why you don't put limit orders. We don't take breakout trades. You have to get into a trend. Now let's talk about how we would trade this. Back over here, when this range started to set up, would you say that your primary mode of entry was buying support, B, taking profits at the top, so you would type in a B, or would your primary mode of entry be selling short, S, selling short resistance and covering at the bottom, covering at support, covering at support? That would be an S. Or could you do both? Looking at this range, in hindsight, we had these lines at 6:30 from the pre-market session. Is your primary mode of entry to buy support, take profits at the top of the range? S, sell resistance, short, cover at support. B for both. You're buying and selling in the side of the range. It's 40 to 50 ticks range. The answer is yes, it is tradable. So then the question becomes, how do you approach it? You see short sells there? You see buys? Or could you theoretically do both? Good. All right, good. A lot of boths. You could do both. Now, here's another way to look at this that you might find helpful. Generally speaking, when you're coming off an uptrending move, as you did right here, can you see that over here, the market was trending up? And here we're kind of striping between green, this indeterminate color, a little bit of red, green, indeterminate color, striped shirt. Looks like a striped shirt, right? So that's another clear definition. The other one is that your mid-band is, your mid-band is flat, more or less. It's flat sideways. Your lines, your support and resistance. There are many clues on the table to let you know you're in a range. I would be buying support as my primary mode of entry because you're coming off this powerful uptrend, and all that's really happening is it's checking these support levels right here. And then, of course, you can see over here where it takes off. It's just another trend continuation, continues on into the close. That first one might have been considered a phantom. You're right, Paul. I can see that point. That first one could almost be considered a phantom trade, yes. I would say this one right here, where you're in a strong uptrend. You can make the case this is a little bit of a phantom. Anything that goes like sort of deeper beyond the midband and the bars turn the other color, it goes as far as down here. Now, a word about phantom trades, okay? I want to be clear about this, and I'm going to look at these two examples right here, and then we're going to go on to another instrument. A lot of traders can get, sort of, how would you say? Here, let me look at this example over here. Here's maybe a better example. Let's look at a better example here. This is a good example right here that I think will be illustrative of what I'm talking about. Okay, here you were clearly in a downtrend. No question about it. Maybe you shorted here, maybe you shorted this retrace. You're short. Market's short, background is red, you're selling off. Now, notice how on this retracement here, it plows right up through the mid band and comes all the way to this outermost band. See it? See it? That first kiss of this area right here is called the phantom trade. This is the deep probe retracement that we used to discuss all the time. For years we've been talking about this trade. It still confuses traders. And because in this case the bars are blue and it turns the background green, let's go back and recreate this price action. Now, for a lot of traders, you'd be looking at me and you'd be saying, Charles, are you telling me to short that? That's still a downtrend? Came all the way up here and the background's green and the bars are blue. Are you really telling me to short that? I'm not going to short that. That looks like a trend change happening to me. Now, just like we looked at on the breakout of the range that we looked at just a couple minutes ago, what would make this phantom trade change to something else? By the way, if you take these phantom trades, they're very simple. You simply short the rollover, and your goal at target is just to get back to the midband. Now, if this starts to turn into a legitimate trend change situation, what would need to happen? Think about it. What would need to happen here for this no longer to be a short condition where you're shorting rollovers? We just looked at it a few minutes ago on that breakout, right? What would change? What would need to happen going forward for this now not to be legitimately short, but now you're starting to look for longs, that a trend change is afoot? It's going to have to hold some higher support levels, right? Comes back through midband, goes up through resistance. There you go. So let me be clear what we're saying here. What we're saying is that if the market rolls over here, comes back down, plows through the midband, and goes all the way down here and continues its downtrend, which sometimes the market will do. In this case here, you are clearly shorting this market. You're continuing to short it, right? However, if the market comes down on a retracement and finds a higher level of support, say anywhere in here, and holds it, what should you be doing? Let's advance the chart. Here it comes down. Right here, these yellow bars kiss the midband. So your initial phantom worked out. Legitimate short worked out. However, what's starting to happen now? Between 8:19, 8:16, and 8:35, you spend about 15 minutes in here. I'll help you out a little bit. What's happening right in there? ABC, it's holding a higher level of support. It's bouncing off a midband, coming down, bouncing off a midband. Background is green. You're getting a higher level of support. Should you still be shorting this? Yes or no? In this condition right here, should you still be shorting this? Yes or no? Just type in Y or an N. Simple question. 5 seconds on the clock. Yes or no? Would you still, if this came upon you tomorrow morning at 8:20 Pacific time, and you had this condition on any chart, say it was I don't know, YM, crude oil, doesn't matter, would you still short this? No, absolutely not. Now you're starting to look for long trades. Does everybody see that? Okay, well, now let me advance a little bit more, and you tell me what you think now. Let's continue to advance what would happen here. Okay, here's 834. There's 840. There's 845. 850. 9 o'clock. So what is it doing in here? What is this market doing in here? Why does it keep coming down here and hitting this, bouncing, hitting this, bouncing, hitting this? Background is green. We're starting to get blue bars. You're starting to move up a little bit. See the mid-band just come up just a little bit? You still want to short this? No, it's building support. It's consolidating. You are buying support now. So here is a healthy way to think about this area. And I'm just going to block the whole area in like such. This is really what's considered when you're looking at trends, ranges, and trend changes, is this is what you call a transitional area. Okay? This is what this is. This is a transitional area. The market is trying to determine whether it's going to go up and take off in the bullish direction, where you're trading long on retracements, yes? Or it's going to finally break this mid-band and head back down here and resume the downtrend. So we're transitioning. It's trying to consolidate. Buy programs are fighting sell programs. They're trying, who's going to dominate, the bulls or the bears, right? So the way the phantom works is the first time it hits it and rolls, this one right here is a legitimate phantom short. However, when you go into a consolidation area like this, the background changes to green and you start to exhibit behavior of higher lows and higher highs, the likelihood is at some point it's probably going to break up and give you a nice long trade up. Now, final question, and then we're going to leave this area for a fresh instrument. The area in question, the transitional area right here, I'm going to broadly define it as this right here. I'm going to say more or less this was it right here. Is this a range or is this a trend? 5 seconds, R or T. It's one or the other. Can't be both. I'm saying specifically in the box that I have right here. Is this R or T? 4 seconds. Type in a letter. That's all you got to do. R or T. Range or trend? 2 seconds. Range or trend? You make the call. Time's up. It's a range. Okay? The characteristics of a range are flat midband. Support and resistance levels more or less stay the same. You're not getting higher highs and higher lows or lower highs and higher lows. It's not happening. It's 54 is roughly support and 56, 56.30. This is a 20 to 23 tick range. Yes, it is tradable. Now, inside of this range, are you looking for runners or scalp trades? R or S? Are you trying to get runners in here, or are you scalp trading? 4 seconds. 2 seconds. Are you scalping in here or looking for runners? 1 second. Time's almost up. What do you think? Time's up. Scalping. So I just thought of a good acronym that will help you remember this, okay? And this is, if you just commit this to memory, you will be all good to go. Trend equals runners. Range equal scalps. That's it. That's all you got to remember. If I am in a trend move, up or down, doesn't matter. I am looking for runners. If I am in a range, by definition, I am looking for scalp trades. Because in a range, there is no runners. Does everybody understand that? That's 4 words that essentially encapsulate everything you need to know about an approach to range trading and scalp and trend trading. It's that simple, really, literally. Trend equals runner. You can put more contracts on the, Dave H has typed in here, if you're going to scalp this range, should you only do it with one contract? You can. It's a function of how much risk you want to take on. What I typically do is if it's in a range, I generally don't like ranges. I don't trade them. Truth be told, I don't really trade them that well. I tend to avoid them. I look at other instruments that are trending and go ahead and take those trades. In fact, we had David S. type in here. I'm not doing anything in that range. I don't like ranges. So look, that's perfectly fine. You don't. I'm simply showing price action and what you can do with it. If you get in there and sim trade a market in a range and you get your butt handed to you, well then, repeatedly, even in sim, well then obviously you're not going to put your live capital at risk and start going out and scalping ranges. Okay, maybe you're not a range trader. I mean, it's just that simple. I know a lot of range traders, I have for years, that are actually good at ranges. They make a ton of money in the range and actually lose money in the trend. I know, go figure. I never really understood that, but it's just a different way of thinking, All right, cool. Okay, good. Well, we got some more time left here. What do you want to see? What instruments can we squeak in here in the next 15 minutes? Go ahead, type in some instruments you want to look at, and I'll get those charts down here. You want to see crude? You want to see YM? You want to see some gold? What is up next on the docket for the Chartabilio? Chartabilio. We're going to do some, whatever you vote, whatever your collective vote is, I will pull those charts up, and we will do some exercises on them together, preparing ourselves for tomorrow. So we're looking for instruments here. I've got a CL here, I've got an ES, I got a gold, I got a DAX, I got a NASDAQ. We already did Russell, Greg, we already did Russell, so Russell's off the table. We got another YM coming in here. Crude oil at the open of the pit market from Bill. Go ahead, type in your instruments. We're taking votes here. Cast your vote, what you want to see. YMs and ESs. Okay, let me write this down here. So let's because we're gonna have to rip through some of these pretty quickly to cover them all in the next 15 minutes. Let's go YM. Let's go ES. Let's go crude oil, and we'll squeak a gold in. That's four charts. So I'm gonna have to rip pretty quickly through them. Let's look at crude. Let's go to crude first. Let me get the crude chart down here real quick for you. Stand by. All right, let's go back at the crude pit open at 6. By the way, that's why I'm not in the room at 6 o'clock. I don't trade oil at the pit open. Gary's always done that very successfully. He's good at it. It's not my cup of tea. I don't do that. I'm more into the equities myself. I'll occasionally take a oil trade if it's a good setup, especially on inventory day. You get some good movement, volatility. Gold, occasionally I'll take a gold trade if it's a real nice juicy setup on a retracement and a good trend. I'm always watching a gold chart for good trades. Mainly I trade the 4 equities. I trade YM, well, in this order: Russell, YM, NASDAQ, and ES. Well, it depends on the day. Today Russell was choppy, so I focused more on the other 3. So it kind of varies. Midnight Pacific time this morning was located right here. So this was the coming out of the Asian trading session over here. Singapore, Hong Kong, sideways. Crude was kind of sideways. Here's the European session here. So going into the European session, about midway into it, what direction did crude start heading? Up or down? Just type in a U or a D. Halfway into the European session, did crude start going up or down? Say around 3 o'clock my time. Here, I'll help you out a little bit. Up or down? That's the first thing you got to figure out when you look at a chart, right? Here, let me just another little acronym that will help you out. When you first look at a chart, we draw support and resistance lines. That is number 1 before you do anything else. Here, in fact, I'll just type it right in here. Okay, that is number one. Numero uno, above all other things to do. That is the very first thing you should do. Apply discipline to your trading and draw those support resistance lines first thing. Second thing you do when you are looking at a chart is you have to assess market direction. Because everything comes from that, right? And it is just as simple as this. You just ask yourself, is it trending? And is the trend up or down? Right? That's it. Up or down. And if it's not trending up or down, it is range bound. These are the questions you ask yourselves when you start to assess any chart on any instrument at any time of the day. You always do these two things first. Always. Without fail, you need to do these two things first. You put your lines in, and then you assess the market condition. Is it trending? And if so, is it trending up? Is it trending and trending down? No. Is it in a range? Yes. Now, there are conditions where you can be doing a little bit of both. Now, what do I mean that? Now, you're just contradicting yourself, Charles. You're throwing us off. Don't throw us this half-made-up stuff where you're throwing all manner of whatever. You're confusing us now. Well, let me ask you this question. In this area right here on crude oil, say more or less in here, are you going up, down, sideways, or sideways to up? I'm not trying to throw a monkey wrench in things. But you can see how you can have sort of a similar condition occurring simultaneously. Good. Good. Perfect. From a technical point of view, yes, I totally agree with you. We are in a range here, and it's consolidating. Crude oil going into the pit open at 6 a.m. was consolidating. No question about it. However, here's 6 a.m. Here's the crude pit open today, this morning. Okay? You were technically sort of sideways to up. In other words, you can clearly tell that crude was trying to decide, even with this little head fake spike down, which technically could be, quote-unquote, a phantom, yes? Coming down into support and buying it. I don't know if Gary bought this. He probably did. Maybe you boxed it over here. This would have been coming close to 630. This was actually a nice little box trade over here at the mid-band, region box trade at the mid-band. Come up, ABC pattern. You hit the top of the range. You pull back, get support. Classic ABC pattern. Holds, and then off you go. So if you were trading this range, I'll just help you out. You were sideways to up, so you were buying support as your primary mode of entry. You didn't, in this condition, you didn't want to be shorting this, okay? Every time you come up here, you're not shorting that. You're taking profits from lower levels, yes? Profits from lower levels, profits from lower levels, profits from lower levels. Trail your stop, break out, and it runs. Now, after this initial trade entry, another pop quiz, and I'll give you 10 seconds for this one. Was there another trade entry on this chart on crude? And if there is, where is it located, either time-wise or price-wise? Just type it in. Here's time down here. So, for instance, here's 7:07 o'clock, 7:03, 7:08, etc., all the way to 8:11, 8:13. Price-wise, here you're looking at 60, 65, 70, 55, 56. So there is another long trade entry after the initial range box right here. Can you identify where it is either by time or by price? And I'll give you 10 seconds to do so. And this will reinforce how we trade this price action. 9 seconds on the clock. Where is the secondary long trade entry on the chart? 7 seconds. You can call out a time or a price. Either one will do. 5 seconds. This is really important that you see these so that in real time when they start happening in front of you, these bars are coming in, they're kind of shooting at you, you're getting all confused. You got to sort of, in the back of your head and your subconscious, you got to go, blammo. I see that trade. I know I got to be getting in. Ba-boomba, I'm getting in. That's how you do her. 4 seconds left. Where is the long trade entry on crude after the initial region box located here shortly after the pit open? 2 seconds left. Type in your trade. See a lot of great numbers coming in. Bill, PW, Raji, you get it. Weldon, Kathy, good. Robert, ooh, good feedback here. Excellent, excellent, excellent. Dennis gets it. There, Randy B seeing it. Jim W, Jack. Oh yeah. All right, good. Okay, so let me show you the one that I was looking for the answer for, and it is located right here. So if you said anywhere between, like 737, 738, 739, even as far as 740, I was looking right here. This is what I'm trying to say. This is right in here. This was it. Price-wise, would have been located somewhere around 55, 56. I'd give you all the way up to 60. So if you said, I was looking for this retracement right here. Now, some of you might make the case, well, Charles, there's several other ones on that chart. You could be right. Now, here is our definition. There's several ways to take retracement trades, and I'm going to show them thusly. When you're in a powerful trend up, the trend move is up. You're stair-stepping. Background is green. Bars are predominantly blue. You're getting a series of higher highs and higher lows, higher highs, higher lows, higher highs. So in essence, this is the thrusting part of an up move. Yes, in the direction of the uptrend. Now, at this point here, the market comes back down close to the midband, within a few ticks of it. You've come through the stealth line. You've come through line 6, this thin little line 6 line. You've pierced both of those. And you come within what we call a sweet spot located for trades, long, of course, on a bounce, more or less defined by this right here. You can make a living on these trades alone. This is what's called shallow retracement, where it doesn't quite get to the midband, but comes close to it. Most of you, of course, know the midband trade. We call that out all the time. It's my favorite trade. Most traders love the midband, especially when it just sort of sits there for a little while, right? And then the deeper retracements, everybody knows, can come a little deeper below it. Not necessarily phantoms. Phantoms tend to be a little further and deeper, but nonetheless, it can come below the midband, and that's just called a deep retracement long, to get long. Now, some of you might have said, well, if you put that kind of definition on it, you could say, well, maybe this was a long entry. I'd say this is the very bare minimalist retracement to get in the trade. There was 2 more of them over here like this, see it? Where you technically pierced stealth and line 6, just barely. Now, here's what I want to say about this. If a market is in a powerful uptrend, as crude oil was here, you can take these shallower retracements if you're missing the trade. Whatever you do, and if you ever take away from this, I want you to remember this one important thing. When the market is thrusting and peaking, this is where you do not want to get in. So let me just make this crystal clear. The thrusting is where the market is peaking in an uptrend like such. This is not the entry. A lot of you will wait and pull the trigger up here only to be stopped out on this retrace. You have to patiently wait for the pullbacks. Pull back here, pull back here, pull back here. I'm not going to do them all. You get all the idea. You get the idea, right? Just doing all the pullbacks, 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 pullbacks. That's how that works. So knowing that, let me ask you this question, pop quiz, before we wrap. Is this a legitimate retracement trade? Yes or no? Right here. Right here, this one. 5 seconds on the clock. Yes or no? Is that pullback deep enough to get in? Based on our definition that we just did in an uptrend? Sure, buy market right here, huh? Worked out. Yes or no? Does that meet the criteria for deepness, sufficient retracement? Yes or no? 4 seconds on the clock. This is the last question. Make your call. 2 seconds. Either you take it or you don't. You make the call. 1 second left. Okay, I'm going to give you a hint. Like such. No, it does not meet the criteria. It has not broken the stealth line. It has not pierced line 6 in the uptrend, and it has not closed below both of those and formed some support, higher support area. It did make money, yeah. In a powerful uptrend, everybody's a genius. You pull the trigger, buy, you get in. You just don't want to do it when it's peaking. Okay, you just got to know that. The pullbacks, if they come anywhere near the midband in a nice powerful uptrend, normally work out pretty well for you. Well, listen, I'm out of time. I'm going to stop the recorder here.